today some real estate things, real estate matters. I've even brought my Home Depot hat for you that I'll put on when we talk a little bit about it in the second video that we do today. But it's good to have you. I hope all of you are doing well. I hope your finances are doing well. Probably not if you've been in the stock market any at all. With the things that have gone on with worldwide, even relative to tariffs and things, have disrupted that market greatly. But if you'll be patient, my honest feeling on that is that it's going to turn around, and that similar to what we experienced in the day of the COVID, when things started off drastically poorly, the first 4 or 5 months of the year looked like nothing could be worse for our economy and for the country than that COVID epidemic. Then we know what happened. The latter part of that, it turned around and reversed. Of course, the stock market went in the pits, went down, 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 and Trump was the president, as we know, and then the second half of that year made an unbelievable comeback and actually finished positive for the year. Well, I feel the same could happen here in this situation about tariffs being blown up and all the news overwhelming even AI stocks that we'll see in the second half of the year, and we're seeing a little bit of it now. Once they calm that down, the market will turn around, I believe, and it will finish the year on a positive note and make that comeback from deep down, in some cases 20-30% down, which would be a tremendous year to finish positive in 25 here. Today, in this first series, I want to talk to you a little bit about, normally I operate, I live on the premise that when you're in the banking position, in most of your financial transactions, business-wise anyway, in your business, that you're in a favorable position. You can make the rules, you can dictate a lot of your outcomes, if you're in control of that and well aware of the banking situation, because we have to live by the dictates of banks so often and the interest rates that come from the banks. Today, I'm going to share with you what I think is the next big wave, at least for me and my family and some of the close members of the Alabama Real Estate Investors Association, AIAclub.com. If you want to pull that website up, that's our site that we operate from, and has lots and lots of articles, membership benefits that is on that site, along with the INS Banker site that you'll find on YouTube. We are just building it out, and it's going to get better and better, particularly with real estate education will be coming for you guys that are find that real estate are a big part of your business and your finances. You'll get a lot of education off of there very soon. In fact, there's 3 full courses already on the site there at INS Banker. Just click on that little link at the top, and you'll go down and start picking up articles that you'll enjoy reading and studying. I know one is on probate real estate, one is on creative financing by the guy, to me, Larry Harbolt was the best I ever saw at it. He recently passed away, but Larry was a absolute authority in that area and did it all his life for 40 years. And I learned so much from him, and so many of our members did, and are still. So we're continuing that legacy of educating people how to do creative financing and subject to deals which were a big part of my early start, particularly in real estate, taking over properties and spreading out and getting wider and wider in real estate properties that were owned and were obtained favorably, at least with little or little money out of pocket. So today we are here in 2025, and after a lot of involvement and this may or may not apply particularly to your set of circumstances where you're at, where you're located, but it probably does or it could. In ours, we don't like or I don't like our local environment as it relates to crime, crime statistics, and in our city here in Birmingham, Alabama. And secondarily, and probably more importantly, real estate wise, but both of them are big factors, is the court system. I'm not finding it favorable to good legal decisions coming out. The court has changed from what it used to be when decisions were made based on law and based on whether you had your documents, particularly your lease, done right, and when somebody failed to pay, then they breached that lease, and so they couldn't win if they did not have proof that they had paid rents. It was just that simple of a matter, and in terms of getting a judgment, now there's more to it, collecting that judgment, but still, you would get out of court with a decision. If that happened to be, and most often, as we know in real estate, that is the case that you're in court about more, is non-paying tenants. Today in 25, I have moved and came to the conclusion that single-family houses and single-family residence duplexes are not the most favorable real estate to be involved in my area, just in the Birmingham area. And what we have moved to and are in the process of moving to is student housing. I'm going to share this with you today because I strongly believe in it, and I'm going to be open and above board. I want you to know I think it's the hottest thing for us to be involved in. We will do student housing that probably many of you are familiar with if you've had a child in college or been around it. They typically will rent bedrooms from condominiums or from houses, and so that is where we're going, and providing housing, either development of the housing or buying a structure that is suitable for bedroom renting, so to speak. I like to call you rent the bedrooms, and you normally are got a lot of advantages there of collecting rents for a semester at a time, at least, sometimes even for a year. On an annual basis, you go ahead and collect the rent up front, and then the lease is either renewed or it's not renewed. So I'm going to speak on it a little bit today, what we're following, and I think this could be a big boost, even if you did it just partially. Student housing, parents set aside money for that to send kids through college. Kids save money for it, and then you've got the student loans that are so prevalent in our country today that provide the money and funding for not only the housing but all the other educational expenses that will be incurred. But I like everything I know about it from that regards. You don't get that in single family housing, and so you can build apartments, you can build 4-bedroom, 2 baths is what we choose to do, and rent each bedroom to a student, provide them with areas to study, provide them with good access to the school, as near as we can get to the school, and then we just lay out a map where the schools have the most need for private provided housings that we bring to the table. So we're starting in our area is going to be in the Gulf Coast area, where some junior colleges were not able to build student housing, and in one or two cases provide none, and so that needs to be done by private individuals, and we choose to do some due diligence, find that out, and of course target for that area. We go to the schools, discuss it at the college, and get a good relationship with them so they can grow their student count, and that housing is a big factor of that. They'll tell you, and so we then turn and either look for existing housing or even look at bringing in and building out the housing for it. So put that idea in your minds today. I think it'll be very good regardless of where you are, whether you have problems or issues that we may have locally in regular single-family housing. Student housing is a very positive, and we got people doing group housing where they're doing it with adults. We even, in the area that we're in down there, there's a very strong need for worker housing, providing them with the same type of housing as we do the students. And workers, they need an affordable place to rent, and so in fact, there's in that area that we're doing most of the early work in is as many as 8,000 to 10,000 workers need housing, and the $700 to $900 a month range is affordable, and much less than the $1,500 to $2,000 a month of apartment living in that area. So puts us in a good advantageous position, and we're able to cash flow very profitably. We like it. So far we like everything that we see and know about it. So wanted to share that with you today. For if you have an INS bank plan like I do, as you know from previous videos, that has been the key ingredient or element that has separated and differentiated me from other young investors at the time that couldn't and struggled getting funding. It provided me with funding without credit approval, without job income approval, debt to income ratios. None of that was ever a factor for me, even early on, because I built out my own bank and borrowed money from insurance companies who operated strictly on collateral, and I had to provide and build the collateral, and it starts small and grows to be medium, and then to large, to where you finance the whole property one day. But it is a growing building model, but it is something that many wealthy tycoons and families of many years back, how they built their own lending and financing business, banking, even into the banking area. Walt Disney built the beginnings of Disney World from borrowing the same way that I did from insurance companies. We'll tell you about more details and do a review of that again pretty soon, as I did early on. There's some videos in here now that you can go and glean from. We're here, my son and I, to assist you along with staff of how to properly develop and build that out. Very, very few insurance people in the industry, very few, have a real foothold in the real estate business, and I dare say that I know of no one in this country that leads a RIA club and works with 350 to 400 members in real estate, but myself in this country today. So real estate is a very integral part of everything we do, and it's how I done my banking and done my real estate. Never been turned down for a real estate transaction because of funding, and it was because of my exposure to this type of borrowing and type of capital accumulation that can occur if you just know how to do it and that you practice it, and you'll find it to be a great tax benefit, combined with real estate and all the tax deductions that real estate provides us with, tax deferrals, depreciation. These things are a significant contributor to your wealth building today, and it's steady and solid, consistent, almost never losing money. Why is that important? Well, today, look around at the stock market. We got to come back, certainly, and I expect it to happen, sooner rather than later, but you have to be patient. It's very uncomfortable for people to withstand and hold when things are, down 30, 40% in value. It's very, very hard, and I know that. But you don't have that type of stuff in real estate. That portion of your assets will be much, much comfortable for you. In our area, we don't even hardly notice any pullbacks in the market ever. As an investor, if it is a pullback, it's just a buying opportunity for real estate investors that can buy. Somebody asked me just the other day about 2008. How did we get through that? How did that affect us? And I told them, I said, hey, I can't even remember a negative thing about 2008. It was all positive. I mean, we bought real estate during 2008 at reduced prices, at discounts, a lot of it. So we probably didn't grow a lot, in terms of appreciation. But 1 to 2 years of that, you don't even hardly notice it. You don't even notice if it is a flat year. You just notice your rents and the demand for housing, and it actually got heavier during that time. But anyway, let me wrap this video up with just saying student housing, you've got my contact numbers. You've got my email on our site there. You can contact us and we'll talk more detail about student housing with you. Be here to answer your questions regarding it. We are just beginning it ourselves. It's not much. We just tweak our minds a little bit to expand. Once you're experienced in real estate, there's just there's a little bit additional to learn about it and some of the nuances and small things, but it's still real estate, and it's still providing real estate to the public on a rental basis. And it's just, believe me, the numbers, if you'll scratch them out, get you 100 beds rented and add those numbers up, add your expenses up that you expect for it, and you'll like it just like I do. You'll like it. So you buy that again for cash flow, for long-term wealth building, and we're also going to be involved in the selling of these manufactured homes in factories that we plan to use most. But we're open to doing anything in terms of the housing, of buying, an apartment building, buying a hotel, whatever would provide and be conducive to student housing. certainly open to that and interested in that. But if you got any questions about it, maybe I'll revisit this a little bit later as we, get really off the ground and going with student housing. Hope you enjoy